Hi everybody, thanks for watching this quick video on the silver future. This is a silver future with the next contract in front. This is commodity, yes, it's one of the commodities. And why that? Because it's been, next week will be a lot of movement, a lot of volumes that will be around silver, because I've been seeing that the ratio between silver and gold is too high as it is now. So I mean that the price of gold compared to the silver is much higher than it generally supposed to be as a mean value. I will go through that in a bit later, but what we can see that the market silver has been a bearish market since the 2012, and since 2015 it has been moving sideways. This is a weekly chart, so starting from a weekly chart the market has been sideways. So perhaps this one, has been the silver has been going down during last month as soon as the coronavirus came in, and now it seems that now that the market started recovering from the coronavirus, it seems that the silver will go up, will jump up again. So this is based on a weekly chart. If you're gonna go more in detail for a daily chart, again, the daily chart, this is what happened right here. So this is as soon as the virus came in, as we can see, there was a bearish market, and now the price moved back up inside the channel, and it seems that the market will is moving very fast, is recovering what it has lost during last weeks or months. So the idea is that the silver should go up at least up to this level. It's almost $19 US. Perhaps it's gonna go zigzaggy as usual. It's gonna move not just straightforward up, perhaps with some price retracement, but the idea is that it might go up to 19, or at least up to the price that was before the virus. So this is the idea on silver, and if you're gonna see, perhaps this is daily, if you're gonna see 1 hour chart, it's even better, just to give a better understanding what's gonna happen here, and it is what's happening right here. So this is an uptrend. We are in an uptrend, we are in a rally, so because it's a rally and there were some signals, some channels, some descending triangles, some patterns that there are all continuation pattern. In fact, one of this one was a channel again, and then the channel was broken. This one we can do it together. We can move this one there. This one was based on the previous analysis. So if we move, this one was a channel, as we can see, another channel there. The channel was broken, and the price are moving always in this channel. This channel was broken. So all those posts, those are poses of the market before resuming its trend, that is an uptrend. So, and as it is now, it's moving very fast. So I think it might slope a little bit, so it's move a little bit sideways, and then we will keep going up. The idea is that why there is this idea that the price will go up. So we saw on the weekly chart that perhaps this price might reach 19 because it's moving inside this channel, and even because this is the gold, based on the gold price, as we said, one of the option of the gold, if you see one of my previous video, it was moving up, so it keeps moving up to this target price. Now it can go up to again 1,800 or even 1,900. That was the maximum price in 2010 and 2011. 2010 just after the crisis of 2008, almost 1 year after. But anyway, so the price can keep going up in the gold, or perhaps it can bounce back and moving sideways. But because this one is an uptrend, we are in an uptrend, most likely the price, as I told you before, because this is a symmetrical triangle. Symmetrical triangle is a continuation pattern. The price broken the top line of the triangle, moving upward. This is what happened. Once the price will reach this resistance, let's see what's gonna happen. If the resistance will be broken, most likely the price will keep going up, or otherwise it will bounce back down. But the point is that what happened in the previous years, this is not my idea, this is I got it from a different website, but the idea is that as it happened before, because the ratio, that this is the blue line, is the ratio between gold and silver, this is gold and this is silver, went up, was too high, it jumped down from 80 to 40. This is happened already, it's happened there, and it's happened even before, so all, and then took to close this gap, to close this, because it was too high and then it jumped down. So to close this gap of ratio, the silver jumped up, just to close the gap with the gold. So this is what we are expecting here. So the silver will go up to just put this blue line down to a mean value. I think if you do a mean value, is almost this as where is my cursor, the mean value can be around 70. So to put it down again on at least on 70. Now it can happen that the silver is supposed to go up, but generally this is what happened in the previous, was always the silver jumping up, following up with the gold. I don't think that it might be the same, it can happen the same way. I don't think that it's going to happen the opposite, that the gold will go down to reduce this ratio. Generally, it's the silver that jumps up to close the gap between silver and gold, and in that way the ratio will be reduced, as it happened already in 2008. So this is the reason behind the idea that the silver will keep going up, and this is for a good long-term investment. So long-term investment, just go long on silver. This is what analysts are suggesting, and this is what we saw even on some little bit of technical analysis. And now if it's right time to buy, there are not a lot of signals, but for long-term investment it seems good to buy. And but long-term, it means a couple of years, 1 year, 2 years, so it's not just looking at next weeks or months. It's just more more specific for years rather than or perhaps months, even months, 6 months. And the price might jump up again to close the gap with following this red line, to close the gap with the gold and put down this ratio to around 70, 80, 70, or even more perhaps. Let's see what's gonna happen next. Thanks.